welcome to day 2 of the World Economic Forum right here at Davos. We're outside the Congress Center at the flag area, and this is where a majority of the sessions happen all this week. In fact, we've seen a significant uptick in the number of delegates, visitors walking in to listen into some of those sessions. At Money Control, we caught up with a host of global voices on the future of the world economy, what 2023 is going to look like, and also the role that India can play in bringing a fragmented world together. Let's begin then with the OECD Secretary General Matthias Cormann. Let's listen in to an excerpt of my conversation with him. Thank you very much for talking to Money Control. We're in conversation with Matthias Cormann, the Secretary General of the OECD. Thank you very much for talking to us. All the challenges, what's been playing on your mind the most? Because we are coming off what many economists call a polycrisis here. The Ukraine war, record inflation, climate-linked disasters, and so on. While you say things could be getting a little benign, what's really keeping you awake from a macro point of view?
There is significant level of uncertainty and there are significant downside risks. There's no question. The world has gone through a 1 in a 100 year pandemic. The COVID pandemic, obviously, with some lingering effects. We've got the economic and social impact of Russia's war of aggression against Ukraine, high inflation, high energy prices, high food prices, supply chain pressures, and of course geopolitical tensions. What we say is that what the world needs more than ever is increased global cooperation, increased and better international cooperation. Of course, this year with India holding the G20 presidency, there is a great opportunity for India to help the world come closer together and work better together to solve the challenges and opportunities of our time.
Right. In fact, I was going to ask you, how does OECD look at India vis-a-vis China as an investment destination in the post-pandemic world?
India has been growing very strongly. We expect growth to moderate slightly, but India's growth will still be very strong by international standards. And of course, India is a strong, robust democracy and a trading economy. We see India continuing to grow strongly into the future, even though over the next year or two, growth will be slightly lower than what it has been in the past. But India is one of the largest economies in the world. It's a key player in the G20, and indeed in 2023 holds the G20 presidency. So there's a lot of opportunity for India this year to help shape the global agenda.
Right. While the world is recovering from a pandemic, the World Bank has cut its expectations of global GDP by almost half to 1.7. And, there are multiple crises in Europe, inflation and so on. In such a scenario, what would your message to policymakers be around the world?
We've got to continue to respond intelligently to short-term pressures caused by the pandemic, caused by Russia's war of aggression against Ukraine, caused by supply chain pressures around the world. We've got to continue to respond intelligently. We've got to get inflation under control. We've got to provide fiscal support in a way that doesn't add to the inflation problem. And we need to tackle the structural challenges the world is facing, the green transition, the digital transformation of our economies, and indeed making sure that we have a global rules-based trading system in good working order. The challenges and the issues that are causing problems should be resolved through cooperation and dialogue.
From Matthias Cormann of the OECD to an economic historian in the US, we're talking about Adam Tooze, who, remember, has been talking about the world entering a polycrisis decade. We asked him what he made of WEF economists' projections of a global recession, how India stacks up against China, and the biggest issues that's keeping him awake. He's particularly worried that the world is not paying as much attention to the pandemic as it should. Let's listen in. We're in conversation with Adam Tooze. Thank you very much for talking to us. The World Economic Forum released a report just now, that had a survey of economists, and according to that, 2/3 of the economists they surveyed expect a recession, a global recession. Is that on expected lines? What's your own sense of what the world is going to be like in 2023?
I think that may reflect gloom from a couple of months ago to a certain extent, I think. where we thought we had a combination of a hard landing in the United States, a crash landing in Europe with the war in Ukraine, and China in limbo, essentially. And I would have thought that really in the last couple of months, all of those stories have shifted in a much more positive direction. And this isn't even to speak of the big emerging markets, biggest of all, India, which there's no particular reason to expect a full-blown recession in India. But if you look at the other three big pieces of the global puzzle, the United States, Europe and China, though the COVID news out of China is terrible, the upshot for the economy is that we would expect it to accelerate, not to its previous rates of growth, but nevertheless much better than it did this last year when it was hampered by zero COVID. In Europe, we are now, I think, increasingly optimistic about getting through this winter without a crash landing of, say, the German economy. Remember, 3 or 4 months ago, people were literally talking about putting the German economy into hibernation for lack of gas. It's not an issue. There's going to be plenty of gas. And in the US, I think the likelihood of a soft landing rises every day because the inflation numbers are coming down right now. The labour market remains immensely strong. So to get from where we are now to a full-blown recession can't be ruled out, but I would think more technical or quite modest recession. Putting all of those pieces together, it doesn't really, to me, look like a global recession picture. But, early days, very early to tell, and there is a lot of weakness, particularly in the lower income, heavily indebted, import-dependent economies out there. That's billions of people. It's not a lot of global GDP. But if you're looking at this from the point of view of people in the world, then there's every reason to be concerned about the coming year.
Right. And, where do things stand as far I remember you talking about how we are entering a poly-crisis decade, rather, because of a confluence of factors, that have various causes and effects. And we're actually coming off a poly-crisis here. We've seen a new war, we've seen record inflation and climate-linked disasters. Again, what kind of impact is this going to have as far as the world economy, the world order is concerned?
Well, the war is still a huge imponderable. I know it's a European obsession, that it affects the rest of the world very differently, and there's a degree of impatience out there in the rest of the world, but it is a major shooting war in Europe that involves the world's second nuclear power. So it is a huge risk factor out there. We just simply don't know how that unravels. The other, I think, thing that we need to keep our eye on is the pandemic. I mean, we have seen the largest single mass infection of people maybe the world has ever seen coming out of zero COVID. Hundreds of millions of people in China simultaneously infected. New variants coming out of the United States. The new one in the US doesn't appear to have, we don't appear to have any immunity against it, and the vaccines don't appear to work. So these are the sorts of things which have constituted the polycrisis in the last couple of years. And for me, the term is useful because it just tells us heads up, eyes wide open, don't expect anything other than the unexpected, right? What we should expect next is something that really isn't necessarily on our radar right now. I mean, if all we have to deal with is a conventional recession as a result of a Fed tightening cycle and maybe a downturn in the American real estate market or some banks in China blowing up, I kind of think we were ahead in the game. I mean, my concern is there's something really very seriously unexpected out there that's going to blow things up for us.
What do you think it could be? Will it be a geopolitical thing, a health-related thing, climate thing? When you say, something unexpected.
Well, for me, I mean, this is a game, you play with yourself. What is it that I expect least? The pandemic is really the thing I think we need to keep our eye on. I'm consistently alarmed by the way in which that has dropped down the global agenda. There's a way in which we somehow just cannot keep in mind the sheer devastating shock that 2020 delivered. Yeah. And we are not on top of that disease. It continues to mutate. It may become endemic. And we really have not, since Delta, seen a thoroughly lethal strain, right? We've been in this zone of Omicron, high infectivity, but basically our vaccines keep us out of hospital. We cannot count on that being the case going forward. So for me, in terms of the wildcard scenarios, the sort of ones which would inflict a major shock to India, China, Europe, the United States, that is the thing I'm most worried about.
Right. The theme for West this year is, cooperation in a fragmented world. Do you think that's really possible? Because, people are talking about re-globalization, after deglobalization. How is all this going to pan out?
Well, I think the G20 was instructive, the Indonesian meeting, and India is now in the driving seat there, and good luck with that. It's a tough job, but what Indonesia taught us was that China and America want to walk away from outright conflict over Taiwan. It's quite clear that they understood how risky that became, and try to pull back from it. There was some serious crisis management going on there, and the less we hear about it, the better, because that means it's serious. The less grandstanding, the more we know the conversation was for real. But the other thing that we saw is that the major powers, as contentious as they may be, did not want to embarrass the Indonesians. And that is an incredibly good sign, because what that's telling you is that everyone is kind of buying in to a new multipolarity in which globalization is no longer essentially driven by bolting the Western economies and the Chinese economy together, but is actually becoming thoroughly polycentric, in which players like India, Indonesia, Turkey, Brazil are major pieces of a global jigsaw puzzle, which everyone understands an interest in maintaining at some level. Will it be the same gung-ho, flat world, massive integration, deep supply chain story we had in the 90s, 2000s? I think probably not, right? And the new pieces of the puzzle don't lend themselves to that kind of incorporation, India most notably, right? It doesn't have so far a great track record in supply chain manufacturing incorporation. There may be things in the future. Apple is a harbinger of that, maybe. It's yet to unfold, right? So that is a story waiting to happen. But I do think what this suggests is that this global configuration that we have has a degree of resilience. I mean, I think a lot of people thought that G20 summit was really going to see a blow up, and it didn't. The Russians were quite marginalized. India set the terms in very important ways in providing the wording, and it's all about wordings at meetings like that. So it's a tough ask managing the G20 in the current moment. But I don't think it's a bad thing. It's fallen to a major player like India, following on in Indonesia's footsteps to hold that together.
Well, those were two voices from the economy space, but time to also bring you a couple of big corporate voices. Now, one of the fixtures at the World Economic Forum in Davos is the PwC survey of CEOs around the world, and guess what? CEOs are the most pessimistic that they have been in a decade because of a host of macro issues, right from the geopolitical crisis in Ukraine to surging inflation and other reasons. We caught up with PwC's global chairperson, Bob Moritz, as well as its India chairperson, Sanjeev, Krishan, on the CEO survey, and also what this means for India, because guess what? Indian CEOs are actually more optimistic compared to their Western counterparts. Hello and welcome to this special conversation on money control on the sidelines of the World Economic Forum right here at Davos. We're in conversation with Bob Moritz, the global chairman of PwC, and Sanjeev Krishan, who's the chairman of PwC India. And this is in fact a CEO survey that every delegate at the World Economic Forum looks forward to every year. And Bob, your survey, seems to have added to the doom, gloom that we are seeing all around. Your survey says 73% of CEOs around the world believe that the global economic growth will decline over 12 months. And I think what's more worrying is that, 40% of CEOs don't believe their organizations will be economically viable in 10 years if they do not transform. What's really driving this pessimism? Because economists we've been speaking to here are talking about a poly-crisis decade. So is that playing into your assumptions?
It's clear that the pessimism on the economy is driven by primarily two things. First, the macroeconomic environment that we're seeing, which is the result of, candidly, what we've done over the last couple of years when you think about fiscal and monetary policy issues, the issues of COVID, supply chain challenges and the like. So you're dealing with inflation, interest rates, and volatility in a big-time way. And that does result also then in potentially certain asset classes being negatively impacted. And you could look around commodities, housing, and for that matter, stock markets. The second thing that's important is the geopolitical uncertainty. And in the past few years, that was primarily a focus on China-US and the relationships over the last, call it 5-6 years. But it's much bigger than that. As we think about the role of the Middle East, particularly with energy now, the Russia-Ukraine issue being contained and whether it can be contained to just that, and equal as important, the elements of how organizations and countries are going to deal with some of these big macro issues. Because right now they're dealing with them on a fragmented basis. So all of this creates uncertainty, concern, and that pessimism. But to your point, the bigger thing is for CEOs, what can they control and what can they do? And the good news, not necessarily bad news, is 40% of them say, I have a challenge. I acknowledge the problem that will not exist 10 years from now if I don't change. The question now is, what change? And do you have the confidence to get that change done? The more pessimistic issue is 60% of the CEOs on the other side say it's not an issue. And we at PwC would say just the opposite. Everybody has to deal with this issue right now. So waking up to that concern is a big challenge for CEOs and management teams and supervisory boards right now.
What I also found interesting is the way CEOs in some economies, believe. I mean, I think the Indian CEOs, for instance, are more optimistic compared to their counterparts in the West. What do you think, Sanjeev, they are doing differently? Or, again, is it a function of the overall macro? The fact that India is seen as a bright spot. We're still growing at 6.9% when the IMF expects a third of the world to slip into recession. So is that giving them the confidence? Because we are actually seeing that play out at Davos. If you walk across the promenade, you can't you can't walk 10 steps without some Indian company. So is that all sort of playing out for them?
No, most certainly. I think the macro is really helping. I mean, if you look at our budgetary estimates, we are running ahead on most of them. So we'll hopefully be within range on fiscal deficit this year. We'll know in less than 3 weeks' time now. I think very clearly bank lending has gone up. We can see that the government of the day is actually saying that even the next year, they will continue to expand on capex, which is a good thing. So in some ways, I think the fact that the Indian macros are looking good now, you can attribute whatever reasons to it, right? The way we procured oil or whatever else. The fact of the matter is that Indian macros are looking well. The second part really is that if you look at India as a market, we have always been a big consumption market, and that stays. You heard just now. A lot of people saying that, okay, technology is something that we will not stop focusing on. Now, if US, Europe, and the rest of the world is continuing to focus on technology and transformation, we know that a lot of it gets delivered by India. So, which means that India's services sector, which is 55% already, comes back to 4. It is rock solid in some ways, right? And you could say there's some pressure on rates and so on and so forth, but it is rock solid. In fact, people want to do more of that, because people are talking about transformation, sustainable or otherwise, but it's only going to grow. So I think that gives us the confidence that it is going to grow. Then you look at manufacturing, which is where the government has actually been trying to say that, okay, I want, whether for import substitution reasons or indeed for saying that India should become, manufacturer to some parts of the world, if not the entire world. They have been giving a lot of subsidies and incentivization, etc., etc. You mentioned a bunch of states also are trying to do that. There is competitive federalism at this point in time. I think all that will make sure that there is job creation. There is equality, if I may say so, when the focus is there on manufacturing. So if this actually pans out, you're taking care of manufacturing, you're taking care of, our services growth, which is there. I mean, why would not India surprise in 2024, 2023, 24? And that's my hope. I mean, otherwise people say that if the global economy grows 3%, India cannot grow more than 5.5% because you can only have a 2.5% delta. I believe
that we need to grow by 6.
Well, I would say that, I think definitely we would grow more than 6% as things stand today. Yes, there is a black swan even tomorrow again, who knows? But I'm pretty sanguine that we will grow more than 6%.
We're delighted to be in conversation with Union Power Minister Mr. R.K. Singh, who's here at the World Economic Forum in Davos. He's part of the India contingent, the group of union ministers who are here. Thank you very much for talking to Moneycontrol, sir. As we were discussing, India is everywhere in Davos. As an industrialist pointed out, you can't walk 10 steps in the promenade without seeing an India presence. So tell us about India's plans this year at the World Economic Forum. What's the India pitch going to be?
It's not only the physical presence which you see. It's now India has occupied a very, very sort of high position in the minds of the world because of what we have done. Now India has actually emerged. It has emerged in the minds of the world. India has emerged. And they are looking at India for investment. They are looking, and India is actually a growth story, positive story in a world which has seen a lot of crises.
Correct.
So that is what's happened. You take a number of fields, and India has emerged as the shining star. One, of course, is my field, energy. So we have emerged as a shining star in energy transition. We have the fastest rate of energy transition. In fact, we are the only country whose energy transition actions are consonant with a sub 2 degree rise in global temperature. Whatever we pledged in COP21, we achieved 9 years in advance. We have emerged as the most attractive destination for investment in renewables in the world. And our renewable energy capacity has grown to one of the largest in the world. And our green hydrogen and green ammonia capacity is also going to be one of the largest in the world.
Right.
So, people is talking about energy transition. The world is talking about energy transition. The world is talking about climate action. We've done it. We have done
We've
it.
Actually walked the talk when it comes.
Yes, we have
and
done
now
it.
We also have plans for green hydrogen.
And we've, and we are also emerging exporters for, modules. We were huge importers of modules. Now we are exporting modules. Then apart from that, we are emerging as one of the biggest manufacturing centers for green hydrogen and green ammonia. And that again is something which will be at a scale which no other country will be able to match.
Right.
I already have manufacturing plans for 32 million tons of green ammonia. Many of my companies have already tied up orders in Germany, in Japan, etc. Because we are going to make it first. And we are the most competitive because our renewable energy costs are the least.
Right. Mr. Singh, can you also give us an update on the...
And not only this, that's my story. My story is, also the other parts. You see, we are the one major economy in which the energy availability did not get compromised, in which the energy prices remained stable. In all other developed countries, energy prices went up by 3 times, 4 times, right? And there were disruptions, not in our country. We are one country which achieved universal access in the shortest possible time frame. So the energy, we have really done something. And now, also the one sun, one world, one grid. You have different countries now wanting to get connected with us. So UAE has been in discussion with us. They want to get interconnected with our grid. Saudi Arabia wants to get interconnected with our grid. Yeah.
Right. Mr. Singh, can you also give us an update on the electricity amendment bill? When is it likely to be passed?
So it's with the Parliamentary Standing Committee. So hopefully they should be able to complete their hearings. As soon as they complete their hearings, then it will be passed. In the meantime, we passed the Energy Conservation Act Amendment Bill, if you see. And that has put in place a system, the market for carbon credits.
Right.
And the whole world is looking towards that.
Right.
That, the carbon credit market.
Right. Mr. Singh, also the Power Ministry's scheme to liquidate dues that distribution companies or generation companies has been working so far. So to what extent...
Not really working. It's working very well.
Yes. So to what
extent... It will work very well. It's not a question of so far. It is permanent. It's there.
Right. So to what extent do you think they will be able to reduce the overdues in FY23 and FY24s?
No, already they have reduced the outstandings by almost over 30,000 crores, 35,000 crores. So by the, FY23-24, I think we'll wipe out the bulk of the outstandings.
Any numbers, sir?
I won't give you a number, but I think we'll wipe out a large proportion of that.
Right.
Now you see that the Indian power sector is no longer the old power sector. Now the availability of energy has gone up. Now people get power for 23 hours in the villages, and now the system has become viable. Right. We've changed it.
So a short-term power crisis has been a recurring problem for the last few years. Your ministry moved very fast in the summer to fix this problem. So are you confident that you will...
No crisis has happened. What has happened is that our demand has grown by 10.6%. In the past 2 months it grew at 12.5%, and we met that demand. That's
Final question, sir. The sinking of Joshimath has prompted concerns on basically hydropower projects in the hills. So will the ministry review hydropower projects that are coming up?
No. I'll tell you about Joshimath. Joshimath had a problem. The problem in Joshimath was detected when? In 1975. In 1970, a committee was set up in 1976, and that committee reported. It had all the top geologists. That committee reported that this town has come up unplanned on land which is actually part of a slide, and below it there are rocks which are not solid rocks. They are discrete rocks on gravel, and basically all that drainage and sewage is seeping into the ground because there is no drainage, there is no sewage, and that is loosening the rocks, and therefore you are having cracks. This is 76, mind you. Thereafter, 2010, again a committee was set up. They also said the same thing. 22, another committee was set up. They also said the same thing. The problem is that Joshimath is on the part of a landslide. It is a very old landslide. And the rocks below it are not solid rock. They are individual rocks. That's the problem. So, and the NTPC's project came in 2009. The work started in 2009. The problem is since 1975. The NTPC's project is 15 kilometers away. And between the NTPC's project and this, Joshimath, there are numerous villages. In fact, right above the NTPC's project, there is also a village. Nothing happened there. So, nothing happened to the village near that. Village on top of that project. Nothing happened. Nothing happened to all that villages between that project, 15 kilometers, between that project and Joshimath. I mean, you think that it skipped all those villages and attacked Joshimath. No. The problem with Joshimath is old.
Right. Thank you very much, sir. Thank you. Big voice from the online education space, Coursera CEO Jeff Maggioncalda. He spoke to us extensively about ChatGPT. Is it a threat, or will Coursera use it to enable its courses, to power its courses going forward? Will they use ChatGPT as a layer on top of Coursera courses? He also spoke about the India potential for Coursera. We're in conversation with Jeff Maggioncalda, the CEO of Coursera, the online learning platform that all of us know about. Jeff, thank you very much for talking to us on Money Control. The interesting trend that we've seen when it comes to edtech startups or edtech companies in India is the boost that they received during the pandemic, right? Online learning. That seems to have receded post-pandemic. People are embracing offline learning again. In fact, the online learning companies are opening up offline, coaching centers in India. So life literally has come a full circle for them. Yeah. What's it like for Coursera? Are you also seeing the dip, the pandemic-led boost? Do you see that ebbing away for you?
We see on two dimensions, both with education but also work, a world that was pre-pandemic almost entirely place-based. Like you had to go to campus in order to learn. You had to go to the office in order to work. During the pandemic, basically all the campuses shut down and all the offices shut down. So you had to learn from home and you had to work from home. What we're seeing post-pandemic is definitely not the same as during pandemic, but it's not the same as pre-pandemic. What we're seeing is a hybrid world where you do go to campus, but on campus, you also learn online. And you might go to the office a couple times, but you also work from home. We're working with universities all throughout India to integrate career electives, industry certificates, into on-campus learning programs. That counts towards your college degree. And the new education policy that was just ratified allows for 40% of credits towards a college degree in India to be online.
There's a lot of chatter around ChatGPT. Yeah. In fact, I read a very interesting story yesterday which spoke about how teachers in US schools are now thinking about newer ways to give assignments because they don't want people to use ChatGPT. So some of them are asking for, handwritten assignments. Some of them are asking them to write out drafts in class. Do you think ChatGPT will replace Coursera as a learning tool? Is that something that keeps you awake at night?
It definitely keeps me awake, the power of this technology. Like all I've been doing for the last 45 days, which came out, November 30th, I have been using ChatGPT every
What do you ask
day.
ChatGPT?
I ask it everything. I'm actually running it through the Bloom's taxonomy to really figure out what are the cognitive skills, if you will, of ChatGPT. Yeah, it could do recall, it could do summaries, it could do evaluations, it could do analysis. It can create new things. I mean, it's extraordinary, and it's early. It's not perfect. It's dangerous. It's going to really disrupt things. So I frankly think it's going to open up possibilities for us to help people learn in ways that folks have never imagined. So many learners would benefit from personalized feedback and personalized coaching and personalized help. If you're stuck in a course, if you have a really difficult concept, the ability to actually ask for more help on a certain concept is difficult is like being in a classroom with a professor.
So are you looking to integrate ChatGPT as a layer on Coursera?
Absolutely, and it's going to be brilliant.
Have you already sort of started doing that? When can we see it happening?
I can't give you too many previews, but it's going to be very exciting.
But it's not a non-profit anymore. People are actually talking about Microsoft doubling down on its investment.
Sure.
So, will that matter at all? Because people are already worried about how their data and queries are going to be used on ChatGPT.
Yesterday, Microsoft announced general availability of Azure OpenAI services. They are basically they just released it. Businesses can now actually integrate with ChatGPT and GPT 3.5 on Microsoft Azure. It's here. So
when will we see this integration happen to Coursera?
Well,
will it happen in 2023?
Oh, it'll definitely happen in 2023.
Middle of 2023?
I can't get more specific than that. But we're excited about it. I mean, it will disrupt a lot of things, and mostly what we're excited about. This will change the learning experience fundamentally, and I think so many people are going to benefit from the kind of personalized help.
What do you think are the biggest risks?
Well, you kind of already pointed out. I mean, the ability to verify not just whether a written assignment was produced by ChatGPT or an individual, but a lot of people don't realize this. Well, of course, you can always have ChatGPT generate an essay and then change it a little bit. So it's going to be hard to have technology determine was it ChatGPT, because people are going to edit it. The other thing you can do is you can tell ChatGPT, introduce errors, speak in the voice of a 10-year-old, speak in the voice of someone who's from this region. Like, it can completely modify its style of writing. So assessment is going to be very difficult. Cheating is going to be rampant. And so it already is happening. Kids move quickly on these new technologies, faster than the teachers and faster than the schools. So that's going to be a really tricky thing. And I think the first thing that schools are going to be thinking about is, what do we do to continue to truly assess the capabilities of our students? That'll be the biggest challenge initially. And then longer term, it's a thinking tool. People are going to think about, okay, how do we really integrate this new thinking tool into the educational process?
Right. Final couple of questions, Jeff. This is something that I struggle with, so you should give our viewers some tips and tricks. How does one complete a course on Coursera?
Just go to Coursera.org.
No, we sign up for a lot of courses, but we never end up completing it.
Well, I'll tell you, if you look at the students in India who are taking courses on Coursera for credit as part of their degree, the completion rates are like 95%.
Not credit. For degree, people will study. What about the free courses?
Well, the free courses, here's the question is, are you taking something where those skills in that certificate will help you get a better job? Generally speaking, when people take Coursera as a hobby, maybe they're taking something on history and they enjoy it, but there's not really a
compulsion to finish.
Yeah, it's like, look, I'm just doing this for fun. I'm like, you watch YouTube for fun. When you're doing it for your job, when you're doing it for your degree, you finish the whole thing. When you're not, it's entertaining. It's something you can learn, and I think that's great. So
how many courses have you completed on Coursera?
Oh my gosh, I've probably completed 15 or so.
And what's the one that you're currently studying?
I'm thinking that we need more data expertise at Coursera. So I'm taking the Google Data Analytics course. It's actually a professional certificate program. I'm also taking the University of Amsterdam Big History, which is like the history of the universe, which is pretty fun as well.
Right. On that note, thank you very much for talking to us, Jeff. Pleasure meeting you. Thank you.
Nice.
Time to then get you a couple of big corporate voices from India. In fact, we spoke to Tata Steel's TV Narendran as well as HCC's Ajit Gulabchand on whether India can continue to remain a bright star amidst macro issues and other reasons. Let's listen in to what potential they see on the India story and also their business plans going forward. We're in conversation with Mr. TV Narendran, the Managing Director of Tata Steel, one of the largest steel producers in the world. Thank you very much, sir, for talking to Moneycontrol. Give us a sense of the mood at Davos this time around. Is it very pessimistic, or are people hopeful of a pickup and uptick in China since they've opened up the economy now? What trends are you picking up?
Thank you for having me here. It's been a bit of a mixed bag. If you talk to all the Indian delegates who are here, everyone's optimistic, and rightly so. If you talk to the Europeans, they're quite pessimistic. The Americans are also waiting to see how long will the inflation stay. But I think America has always displayed tremendous resilience, and I expect it to bounce back. To me, the positives have been China. I've been hearing a lot of good stuff coming out of China. Over the last 2-3 years, I understand the savings rate in China was about 35% compared to 25%, which is normal for them. And there's an expectation that all that will come into the consumption economy as well as into the travel economy. I'm told the request to travel out of China, or the travel platforms are seeing requests for more than, which are growing at 3 digits. It's like more than 100% growth. So there's an enormous amount of pent-up demand, I think, which is probably going to come out of China, despite all the challenges that they're facing. And that gives me a little bit more optimism than when I came to Davos. Japan has also been a fairly good story. So
Right.
I think you're seeing many major economies also looking optimistic.
Right. There are concerns that, India's economic growth may slow down, hit by global supply shortages as well as high input costs. The RBI is also expected to stay hawkish given the elevated inflation. So, given all, these factors, the confluence of these factors, what's your view on how this can impact the steel industry?
Sure. So, even if you look at inflation in India, I think the worst is behind us. I think the last couple of months things have started dipping. Also, the inflation that we've seen is not something we've not seen in the past. I think if you look at the developed world, they've not seen this kind of inflation for a long time. So I think in India, things are a bit more under control than we've seen in the past, and I think things will get better. As far as steel industry is concerned, there are two factors. One is the demand side, and I think the demand side is strong because of the government's continued focus on infrastructure. And I think that will continue because you have the elections next year as well, so the government will be keen to complete a lot of the projects that they've started. On the supply side, the cost pressures are there because coking coal costs have been trending up actually. Iron ore prices have been going up, again reflecting what's happening in China. So there will be cost pressures on the steel industry because, as you saw from the numbers, most steel companies are not making money, and hence there's not much room to go down further. And even if you see in China in the last 4 weeks, steel prices have gone up almost, domestic steel prices have gone up almost $100. So I'm quite positive over the prospects of the industry over the next few quarters.
And globally also, you mentioned in terms of your the global steel outlook that you're seeing.
So globally, yes. In Asia, we're certainly seeing steel prices go up. In Southeast Asia, it's up at least $70, $80. Domestic price in China up $100. In Europe, price increases have been sought. But Europe, the fundamentals are still a bit weak. But good news is gas prices have been dropping, while it doesn't seem so. But this is seen as a warmer summer. I mean, warmer winter than normal. But I think that's positive.
Warm, I can't imagine what cold would look like.
So hence gas prices are settling in Europe. And I think the worst of the crisis as far as Europe is concerned on gas is behind them.
Right. While we've seen, a demand uptick, and prices have, still remained muted. Do you expect that to change? What's your outlook as far as prices are concerned?
So as you may have seen, the steel prices have been going up in India for the last couple of weeks, partly driven by demand because January to June is typically the peak season for steel consumption.
Right.
So we're seeing that kicking in. And secondly, steel companies, like I said, have pretty much reached the bottom as far as prices are concerned. So over the last month, I think steel prices both in flat and long products have gone up around 3,000 to 5,000 rupees. But it's still at levels which are much lower than what we saw 1 year back.
Right. If I look at your net profits, sir, the first 6 months of FY23 was significantly lower than a year ago. So how has the year panned out so far for you, and how do you expect to close the current fiscal?
I think what we've guided in the past was Q2 in some sense for India was the toughest quarter because you had the confluence of high coking coal prices and low steel prices. Things started improving. Margin expansion started happening in Q3. Not as much as we expected, but it will continue going forward. So I see the India side continuing to do better quarter on quarter. Europe probably will have its toughest quarter in Q3 because that's when the demand was most fragile and the costs were not any lower. But I'm seeing things starting to improve in Europe as well.
Right. And as far as deleveraging your balance sheet is concerned, I think you mentioned that is one of your priorities. So how do you see that panning out? Again, how will the debt figures look by the end of FY23?
I wouldn't give a guidance on the specific debt figures for the end of the year yet. But I think what we were committed to about 3-4 years back is at least $1 billion of deleveraging every year. We did more than that in the last 3 years. This year, of course, it's a challenging year because of gas prices in Europe, coal prices, working capital. In fact, working capital has taken in a lot of our money. We also bought Nilachal for about 12,000 crores. So this year, I don't know if you're going to have that deleveraging, but the commitment to deleveraging continues.
Right. You also, in fact, since you brought up Neelachal, you completed the acquisition of Neelachal Ispat, and I think you started operations of the unit in October. So, how much you need to invest to get this unit in shape, and by when do you expect to reap the full benefits?
So, we pretty much got the operations going within 3 months. They were close to almost 3 years, so that was a great work done by the team. We didn't have to spend so much capex to get it going to this level, and we'll take it to 1 million tons a year without much capex, maybe 200-300 crores of capex. That's more to take care of spares and things like that. The major capex will happen after this. We want to expand it to about 5 million and then to 10 million. We'll go to our board in the next few months when we ramp it up to 1 million, and then then come back on the capex that is required. But already the plans are being made.
Right. Tata Steel has, also been very acquisitive. I think some of your Bhushan Steel, Usha Martin, as well as Neelachal. So, will you be open to doing more acquisitions? What kind of appetite do you have, or from here on, is it going to be more organic, sort of doubling down on the acquisitions that you've already made?
So, with the assets that we have in our portfolio today, we can realize our growth ambitions for the next 5 to 10 years, because we are today producing about 20 million tons in India, going through an expansion of 5 million in Kalinganagar that takes us to 25. And between Kalinganagar, Angul, the Neelachal site and Jamshedpur, we can easily go to 45 to 48 million tons. So we have enough land in our existing sites to do that. Having said that, obviously any opportunity will be looked at on a case-to-case basis, but we are in a stronger position because we can realize our growth ambitions even without doing any inorganic growth. But whether we'll do it or not, we'll decide later.
Right. Thank you very much, sir, for talking to us.
Thank you.
We end the show today then with a fun chat that we had with Apollo Hospitals' Shobana Kamineni. Guess what? Shobana Kamineni's son-in-law, in fact, is Ram Charan, the star of RRR. Watch her doing a hook step with me right here at Davos. We're in conversation with Shobana Kamineni from Apollo Hospitals. Thank you very much for talking to us on Money Control. Can you take us through Apollo Hospitals' plans for 2023 in terms of adding capacity, investments, new areas that you will look at closely?
So you do know that we have 2 to 3 brownfield hospitals that are going to take place. Another big thing is that our older facilities are now going through not just huge renovation, upgradation, expansion in the cities that we're in. So we'll continue to double down in cities where we are and places where our patients and all expect whatever Apollo can do for them and bring the highest level of health care. But I think the most exciting, place that Apollo has moved to is digital health. This transformation happened during COVID, but it's really, we're the fastest growing digital health company in Asia.
Right.
And this year we'll close, with a 300%
Do you think the
growth.
demand for that is there even post-pandemic? Because we see a lot of pandemic-led industries, going back to offline mode. Education, for example, EdTech has mostly gone offline again. But digital health, do you believe it's here to stay?
From day one, we believed that digital was a means to an end. You needed to be omni-channel to really serve the customer best. So we have 5,000 pharmacies. We have diagnostic clinics everywhere. We have a presence, 7,000 doctors of our own. So you'll get an Apollo doctor in 15 minutes. But behind that, we have some awesome technology that we've applied for patents. And I think that not will this be just for India, but possibly for the world. So there's a strong business model behind it, because you can't build any business without it being sustainable, without it being for the future. I mean, if someone is going to trust us with your health record and we're going to close down 5 years or 10 years from now, how will that work for them?
Yeah.
It's a breach of trust, and healthcare is about trust. And I think that Apollo really values the trust it has from Indians more than anything else that we do.
Right. Last couple of questions. We are 2 weeks away from the union budget. What's the one big reform or the one big reform wish list or the dream that you would like to see?
The 10-year-old one. Give it infrastructure status. I mean, you've got PLI and all this. We should be doing this for healthcare continuously. we should also GST reforms for healthcare. So I think that while we expect healthcare to be at the front line of everything, when there's trouble, let's do it now when we have an opportunity, even in the budget. So give us infrastructure status.
Right. Finally, Shobana, I have to ask you, as someone who really likes Natu Natu from RRR, hearty congratulations.
Don't ask me to do the sketch in this.
Can you?
I'll probably sketch.
Can you?
No, I'll
You would have picked up some tips from your son-in-law, Ramcharan.
No. This is all you can.
Please do that.
My son-in-law. Yes.
But what's been the mood like at home?
It's been just amazing, the outpouring. And the thing is, we thought the movie was fantastic, but the fact that it's receiving this international acclaim, all of a sudden, you're giving so many Indians hope. And like Upasana, my daughter, says, there's no barrier for what any Indian can do. I mean, if you can win this and a Telugu song can do it, I mean, just any Indian can do anything.
Can you sing the song for us?
No. Totally not.
So let's hope they win the Oscar as well for RRR.
Thank you. Really
Thank you very much for talking to us. That brings us then to the end of the bulletin today. Thank you very much for tuning in and stay tuned all week for more updates from the World Economic Forum.